All major Bitcoin mining firms in Yunnan have been shut down today. China isn't messing around when it comes to the Chinese Communist Party's 100-year anniversary, says Kevin Zhang, VP of Business Development and mining firm Foundry Digital. Note to viewers, Foundry is CoinDesk's sister company under Digital Currency Group. Zhang telling CoinDesk that the effective purge of large Bitcoin miners from China is reducing competition for Bitcoin block rewards and dramatically improving the profitability outlook for mining operations elsewhere. Not skipping a beat, North American miner Hut 8 buying $44 million worth of new miners, doubling its hash rate. And joining us now to discuss is Matthew Schultz, co-founder and executive chairman at CleanSpark, an energy software and Bitcoin mining firm headquartered in Utah. Welcome to the show, Matthew. So, just off the bat, are you in touch or familiar with the Chinese market and the miners there? And what's your assessment of the situation?
Yeah, thank you for having me, first of all. It's good for us to be back. So my colleague, Bernardo Schuchman, he's the SVP of our data center operations, has produced more than 50,000 Bitcoin throughout his career. And as such, he's developed relationships and been a primary dealer for companies like Bitmain. So, we've had insight into kind of what's been going on. And interestingly, I was listening to Galen talk about equipment supply and then, talking about Hut 8 making new acquisitions. And what we're hearing is that a large percentage of these rigs that are coming out of the Sichuan province that were effectively operating on surplus hydroelectric power during the monsoon seasons are the less efficient, older version like S9 type equipment. And with the economic conditions as they are here in the U.S., it's unlikely that we'll see those resurface. So we kind of see this as a temporary dip. And we're starting to actually see a higher percentage of inquiry into potential hosting opportunities within our facilities here domestically because of the fact that we've focused more on our ESG energy mix.
Right. So I read a Compass Mining report. They were on yesterday saying that the concern isn't that energy is being consumed, but rather that the amount of carbon emissions that is what is what concerns people, the amount of carbon emissions that are being emitted. And that's a lot of what concerns CleanSpark, correct?
That's absolutely right. So we cut our teeth in the energy space. I mean, we design renewable distributed energy microgrids, and we started out working for the U.S. Marine Corps at Camp Pendleton, designing resilient systems for data centers, communication, navigation, guidance, et cetera. And we did our first cryptocurrency mining microgrid solution back in January of 2018. And so when this opportunity to provide an energy solution at our Atlanta facility came up, our data analytics team took a real deep dive on it, and it made a lot of sense to kind of marry our renewable energy kind of ESG based approach to energy management into digital currency mining, and that's thus far proven to be really effective. And our initial strategy was obviously to target an area that had a very low carbon impact. We've been real public about the fact that we have a 95% carbon-free energy mix in our initial Atlanta facility, but then to add renewables and energy storage and to provide those type solutions throughout the industry. And we're really starting to see some traction working with other hosting facilities as well as other miners to provide them solutions that can impact not only the financial side, because it's reached the point that building a renewable energy, a solar power plant, is less than a carbon emitting or a coal-fired power plant. So to not only focus on stimulating that type of investment through other relationships and partnerships, but also to create long-term power purchase agreements with different utilities that have addressed a sustainability initiative and a desire to make a greater investment towards renewables, and to have the confidence and the certainty of a PPA with a company like CleanSpark or some of the other miners gives them the confidence to make those investments. So we really see that it's balancing the energy mix positively in the long term.
Right. And I hear that being professed on Twitter a lot, that this is actually a great thing. And so is your sense that Chinese miners, as they migrate, and we hear that they're migrating to Kazakhstan, to Maryland, airlifting miners to Maryland, are they taking their equipment with them, or are they just ditching it and buying new equipment that is more energy efficient and clean?
So that's a great point, and CleanSpark has participated on a number of panels domestically about responsible energy management in the space. And one of the things that we obviously don't have control over is, like you said, in Kazakhstan, where 97% of the energy is non-renewables. And so, the census is that, did the consensus, excuse me, did China just kick the ball down the road and have those miners displaced to other areas that don't have the focus on the resiliency? And that's kind of yet to be seen. With regard to the U.S., the largest influx aside from Maryland is Texas. And, we saw with the ice storms this year, 100 people lost their lives as a matter of energy insecurity. So, not to mention the fact that Texas as a state has one of the highest non-renewable energy mixes. So, our focus as an industry, I feel, needs to be proactive and to address these issues internally. And, that comes down to the mining pools and the equipment suppliers, et cetera. But, clearly governing where these machines have gone that have left China, which, represents 70% of the global hash rate, is certainly going to be a challenge.
Right. We've got to wrap it up, but one last question, just because this came on the wires a couple recently, that a class action complaint was filed against CleanSpark alleging that the company had failed to disclose to investors that the company had overstated its customer and contract figures, that several of the company's recent acquisitions involved undisclosed related party transactions, and that as a result of CleanSpark's positive statements about the company's business operations and prospects were materially misleading or lacked reasonable basis. Are you able to comment on this?
Yeah, absolutely. So the source of that information is an anonymous website. We hired an investigative firm to get to the bottom of it. But what I can say is that since that report was published, CleanSpark has raised in excess of $200 million. And the banks that we've worked with have taken a really deep dive to analyze those statements and proven that, without exception, there's no merit to any of those claims. So the class action suit has in fact been filed. We're fairly confident that it's not going to go much farther than that point, but we stand by everything that we've done thus far, and CleanSpark has always we've made strives to be as transparent as we possibly can. With regard to insider transactions or lack of proper disclosure, that same report, I might add, commented back in December that our $19 million acquisition of the ATL data center was I believe they called it a shameless promotion that would result in no financial gain. And since that time, I think we've generated nearly $20 million in profitable revenue off that investment in just 6 short months. So we feel very confident about the company, about our path, about our full and complete disclosure, and we feel that this class action suit is just a matter of time before it's dismissed.